Yo, what's going on? It's Lewis here, the Crypto Beginner, and in today's video, we're going to be going over the Relative Strength Index, also known as the RSI, and how you could use it in cryptocurrency trading. Okay, in today's video, we're going to be talking about the Relative Strength Index, or the RSI. This is one of the easiest indicators to use, and it's also pretty accurate. One trader that I follow, who is a very quick day trader, actually used the RSI as basically his standalone indicator for his very quick 5-minute in and out trades for small percentage gains, but it did win, probably 99 out of 100. That's what he claimed trades when he used the RSI indicator in his specific way. Now, this was in the bull run of 2017, and his trades lasted, 5 minutes, 15 minutes, maybe an hour max. So if you're going to be doing very short trades using the RSI, you have to keep a very close watch on the price. And to be honest, I actually don't recommend trading on the 5-minute charts, and I don't recommend doing just like really quick trades, 15-minute trades, hour-long trades, something like that. What I actually recommend is doing swing trades using the hour chart or the daily chart. I recommend looking at the daily chart first and then narrowing it down to the hourly chart, and then using that for more longer term trades that could last a few days to even a few weeks and possibly even a few months. However, I just want to mention that as an example of how the RSI can be used in different situations. And, you just have to find your own thing that you like to do and you're into. Trading is a pretty personalized approach. So find your approach and test it out and see if it works for you. The thing to remember, though, is that indicators are just that. They indicate where the price might go to. None of them are foolproof, and none of them work 100% of the time. And you have to find your own strategy that works for you in regards to which indicators you use and how you use them. You don't just use the RSI or any other indicator for that matter alone, even though it definitely has some merit to it. Now, let's get into this. As you can see, I'm using Cointracking. This is the software, the trading software I use. And to get the RSI, the Relative Strength Index, on the map, you just simply go to indicators, and then you just type in here RSI, and Relative Strength Index comes up. This will be, no matter whether you use Cointracking or TradingView, same thing, happens. And you could see that when I clicked that, this came up down here. Now, sometimes what happens is this line is really hard to see, so you could always edit it. And to edit it, you usually just go up here and you find out what button is the edit button, and then you could change the color and you could change the thickness of the line. So sometimes it's very thin. I like to make it a little bit thicker, and usually the color starts out like something very dark like this, and that's why I changed it to this, because this is the default, and then I just clicked save as default, and now this is the default. So the Relative Strength Index, or the RSI, what it does is it compares the magnitude of the gains and the losses to measure the movement of the price of the coin. So what it does is it creates boundaries, and you can see there's a boundary right here and a boundary right here, and it creates boundaries of where it thinks the coin should be within, and then it tells you if the coin goes over the boundary or goes under the boundary, which you can see right here and right here. If a coin goes under the boundary, like you could see right here, that's usually a good indication that it's a great time to buy, because it's usually an indication that the coin is oversold. So many people sold the coin that the price went down, and now you're getting it at a bargain. And that's usually what this indicates when it drops below this boundary. If it goes above the top line, then that usually indicates that it is overbought and that way too many people bought the coin, and the price doesn't justify the value of the coin. Now, this would be a great time to sell, because it usually means that a correction is coming. And you can see right here, a big correction came. Now, the RSI isn't something that tells you to immediately buy or sell a coin, but it does give you good confirmation of a move that is very likely to happen, and it will help you feel more confident in the trade that you're about to make. So technically speaking, The RSI goes from, or ranges from 0, which is all the way down at the bottom, all the way up to 100, which is all the way up at the very top. The two boundaries are usually set to 30 at the low and 70 at the high. If the asset falls below 30, that's usually a good indication that the coin or asset is oversold, and it is a good time to buy because the price is going to come back up when everyone buys it. If the price is above 70, that's usually a good indication that the coin or asset is overbought and you want to get out at this point because the correction is coming and it's about to go down in price. And now it doesn't always have to necessarily go all the way down below the 30-point range for you to start stacking in a few buys. You might want to stack in a couple buys as it gets down to that level, and likewise you might want to start stacking in some sell orders if it starts coming in to the top level of the 70-point range. You might want to have some, stop limit orders over here and over here and over here, just in case it comes back down, because sometimes it doesn't go over. And if we scroll back a little bit, you could see, here's a case where it didn't actually go over the 70 range and it didn't actually hit the 30 range down here. And same thing right here. It didn't actually go over the 70 range, didn't hit the 30 range, didn't actually go under the 30 range over here. So you could go either inside or you could use it outside. I think outside is a lot more accurate and gives you a much better picture, but it's totally up to you. Now, you could use the relative strength index, the RSI. You could use that in any time frame. So right now I'm in the 1-day time frame. You could use it in the 1-hour time frame if you want, and it'll still be there. Swing traders like to use the RSI 14, and you could see there's the 14 right here. And even if you click on the edit and the inputs, you can see the length of time is 14. And this simply means that the RSI is created using the last 14 candlesticks. So right now I'm in the hourly chart. So this RSI is averaging out the gains and the losses of the last 14 hours. And if you go to, the daily chart, this RSI is averaging out the gains and the losses of the last 14 days. And of course, it's for 4-hour chart, 30-minute chart, 5-minute chart, etc., etc. So if it hasn't become obvious at this point, let's go over what you would use the RSI for, like how you would actually use it. Well, if the RSI goes below 30, like I mentioned before, that is when you would buy the coin in hopes that it would go back up. And you could wait until it drops below 30 and then you could buy it. So like I said before, you could wait until it drops below 30, which is a really good idea, or you could wait until it, hits the 30 mark. It's really up to you. I would probably wait until it drops below the 30 if I'm going to use the RSI. Likewise, you could simply wait until it goes above the 70 mark, and that's when you could sell. Or alternatively, something that I like to do is to simply set stop limit orders all along the way. So as it continues to rise, you'll continue to keep your initial investments until it actually goes down and then you get stopped out. Some traders like to actually raise this level up to 80 for overbought and then bring this down to 20 for oversold. And that's simply just a personal preference. And so that would mean that would be 80-20 as opposed to 70-30. Now, you really have to keep an eye on a coin if you use the relative strength index. This is because the price could shift pretty quickly when trying to just use this alone. And this is also why stop losses are important. So let's look at some examples. So here I'm looking at Ethereum, and here you could see, okay, well, the RSI says that it is oversold. So this looks like a great time to buy because it's really oversold. I'm getting it at a discount. So let's buy it all up. And as you can see, you buy it all up right here. And what happens? The price increases. So that's really, really good. You made a great buy. However, like I mentioned before, things could move very quickly, especially in these crypto markets. And about 9 hours later, the price drops all the way back down to where you bought it at. So if you bought it here and then you're saying, well, I guess I'm gonna hold off for a couple days, might not want to do that because guess what? 1 day later, the price went all the way down here. So you would have lost if you didn't keep track of the coin. However, if you did keep track of the coin and you saw it went up, it could be good for a nice quick trade of not substantial amounts, but a pretty good amount. And this would be the case if you were trying to go long on the coin, you know, like have the coin improve. Now, some people like to use it to try to short a coin, and I'm going to show you why I don't really like shorting. I feel like it's a strategy that is not really the best strategy unless it's definitely in a bear market. Then maybe I'll try shorting, but for the most part I try not to do that. And I'll show you, this is one reason why you don't want to short using the RSI. And shorting, by the way, is simply trying to sell at a certain price, hoping that the price will go down so that you could buy some more. Now, let's see if you try doing that using the RSI. So up here, you see that the RSI is highly overbought. So you want to sell it because the price is really high, right? That is right here. So let's say you sell all your coins. Now, what are you going to do if you're just using the RSI? Well, you would wait until it became oversold again and the RSI drops down below here, and then you would buy it. But look what happens. You sold it because you saw this, and then the price action doesn't have to, you know, go down or go up. It could go sideways and consolidate and get in this nice range bound moment right here, and that could affect the RSI. And that's exactly what happened. So you could see you sold right here and then it went all the way to right here. And this is the lowest point, but let's say that you are really wanting it to, you know, hit below the 30 until you would buy again. So let's say you don't buy here. Well, what happens? If you did that, you could see that you would have sold right here and you would never have bought back in because it would never have dipped below if you used the RSI alone. And then you would have missed out on these huge gains. So that's one reason why you want to use a lot of different factors, or at least a couple different indicators instead of just the RSI. Likewise, if you would have checked right here and saw that it was overbought, you would have sold right here, and then you would have missed this little rally that went up right here. So it's not always the best thing to do. However, many times it still does work out in your favor. I mean, look at this right here. This said that it was overbought, and it clearly was. If you would have sold right here, then you would have just waited and you would have bought back in right down here, and that would have been a really, really good trade. And so that's one way to use the RSI. The other way to use the RSI is to actually look for something called divergence. Now, divergence happens when the price action of a coin does not match the RSI. And I have a lot of examples, so I'll show you them in a minute, but let me just explain it real quick. Sometimes the price action could look like it goes higher, and you could see right here, this is higher than this, but the RSI is lower. It's opposite. This is lower than this. And when this happens, a pretty big price change is likely to occur. Now, you could trade with the RSI using the divergence as well as the overbought and oversold. Some people wait for the divergence to occur in the overbought or oversold areas. Like you could see, like here's the overbought area right here. And some people do it when it's inside of the RSI as well, between the 30 and the 70. It's really up to you. A lot of traders, however, do like to use the divergence as a more accurate way to trade. Now, the price of the coin usually always follows the pattern of the divergence in the RSI. So let me explain. If the price action creates a lower high, but the RSI has a higher high, then that usually means that the price will likely go up and it's a good long trade. And here's an example of that. The price action, if you look down here, obviously this is much lower. It closed at a lower high than up here, than this close. However, the RSI, if you look down here, the close is much higher than the RSI close. So the RSI is actually moving upward while the price action is moving downward. So what should you do? Well, if the price action creates a lower high, so this is lower, but the RSI has a higher high, well, this is higher, then the price will most likely go up, and that's a good long trade. So what happened? The price started going up, and you could see it went up right here, and that was a really good trade. Now, the opposite is also true. So if a price action creates a higher high, but the RSI has a lower high, then the price will most likely go down. And this is what I mean. The price action right here is a higher high than right here, but the RSI, this RSI is lower. This high is lower than right here. So what does that mean? The price is probably going to go down. Let's check it out. Yep, the price plummeted. The price went down. So you could see if you would have saw this, oh, this divergence, this is higher than here and this is lower than here, then you would say, oh man, now it's time for a really good trade. I gotta sell off so that I could buy more when it comes back down. And then, this would be a good time. You would wait until it hits right here, and then you would probably buy more. Or you would wait until it hits right here, and then you would buy more at this point. And I actually drew out a lot of examples, so let's just keep on scrolling through until we get to more. So this is a price action that is level, it's horizontal. And then if you look down here, the RSI is much lower. So this is going down. So remember, it always follows the RSI, so it's probably gonna go down. Does it do it? Yep, price goes down. And so you would have sold right here, and then you would have been able to buy more in down here. So that's one example. And if you keep on scrolling, you could see right here, this is another example. This high right here for this candlestick is higher than this high. However, this high is lower than here. So that's a divergence. It's probably gonna go down. Did it go down? Yep, it ended up going down. And then you probably would have ended up buying somewhere around this mark, and that would have been a good trade. And here's one that's sort of the opposite. So here, the price action is going down, but the actual RSI is going a little bit upward. And so that means that it should go up. And if you look, well, there was a huge spike right here, and then, yeah, it actually went up. So it continued to go up. So that's another divergence right there. If we keep on scrolling, you could see right here, there is a double bottom. So this is the support levels, and it hit it's basically the same exact area. However, the divergence, this is a lot higher than here. So what do you think is going to happen? Probably going to go up. And what happened? Well, it ended up going up. And I wrote this out. This is like a time where you obviously wouldn't use it. Sometimes this is why you need to see everything in conjunction with one another. So you can see right down here, it broke the 30. So you might say, okay, it's a great time to buy because it's a great buying opportunity to, getting bargains. But I mean, if you just look at this graph, you could see like, no, I probably don't want to buy there. Firstly, it's in a downtrend that hasn't broken out yet. Secondly, if you look at the support and the resistance, you could see that it hasn't broken through any of these. And there's a few other reasons why you wouldn't want to actually buy it right here based off of just the RSI alone. However, if you waited a little bit and then you saw that it dropped, and then you saw that it came up a bit and you saw it down here, this would be a much better time to buy because one, the RSI is much more oversold, and two, you just have better indicators on the actual graph saying that it's a good time to buy. But even if you didn't buy there, it would come back up, and then you'd see this double bottom here. Now, if you had the RSI open and you saw, oh, here's the divergence, and this one sold, or this one ended up much higher than this old one, even though these are at the same level, that would be a really good indicator to buy. And if you bought here, then you'd be able to just ride this wave up. I mean, this would be a really good wave to ride. And then you would probably be ending up selling right here, which is right this area right here. And then if you wanted it to wait to come back down to use the RSI, you would have to wait, all the way to this level over here to buy back in. And that would be if you were just using the RSI, because obviously you wouldn't want to buy up here when it's like this. However, if you were using other indicators, you probably would have ended up buying somewhere around this area, or maybe around this area. And we're going to round this one out with some tips. The first tip is that you could try it out on the 70 and 30, and you could also try it out and change it up to 85-15 and see if that works better for you, or even 90-10 could be an option. And the second tip, which should be obvious by now, is that you don't want to only count on the RSI alone. You never want to count on just one indicator. Maybe if you're doing very, very short trades, like with the 5-minute or 1-minute timer, you could probably get away with this. The third tip is that for a short trade, you might want to wait until the support is actually broken. And then for a long trade, you might want to wait for the resistance levels to actually be broken first before buying in. All right, guys, that was the RSI, the Relative Strength Index. I hope this was helpful. If it was, smash up the likes, definitely give it a thumbs up. Also, if you're new to cryptocurrency, I do have a free course in the description for you, teaches you what it's all about and how to get started with it. So if you're new to cryptocurrency and you want to know more, click that link in the description below. Other than that, let's get to the moon together. I'll see you in the next video. Peace out. Bye.